Hey everyone, today we have AJ Bruno on our show, founder and CEO of QuotaPath. Now, QuotaPath is a commission tracking software that helps high growth teams scale fast. AJ is a two-time founder with a knack for growing sales and account management teams. He's an investor, advisor, and if that wasn't enough, he's actually a commercial pilot. And he actually hosts his own show called Value Props, where he interviews guests while flying them in his plane. Absolutely nuts. That said, AJ, welcome to the show.
Raheem, thanks for having me. It is a little nuts. It's combining my passions and business pursuits into one show. But flying in aviation has been in my blood well before entrepreneurship. I've been flying since I was 15, so wow. I definitely got my start very, very early in the aviation world.
That is very cool. No, that's very cool. And I hope that show kicks off because I think it's a really cool and unique concept.
And everyone listening in. Startup, right? It's a if it wasn't enough of founding companies, it's experimenting inside your own company with different things and doing podcasts. Of course, that's a big part of it as well, as just having conversations. But yeah, it's definitely a work in progress for sure.
For sure. Cool. So AJ, let's jump right in. Let's talk about the founding story of QuotaPath.
Yeah, so QuotaPath was founded in 2018, where we actually turned 4 years old this week. And
wow, congrats.
Thanks. In today's startup world, that's a really old startup. I think feels like it is anyway from a lot of the other founders I talked to. But as you mentioned, it's my second company. My first was a company called TrendKite, founded in 2012. And I was the founder and president of that company, and I grew the sales team to about 150 on just the sales side. That included account management, a little bit of SDR, and of course the new business sales team. The entire company was about 350 people at its peak. So grew relatively fast, and we went from 0 to 30 million in ARR in about 2 years. I mean, at one point we were the fastest growing company in Texas for sure, and maybe SaaS as a whole in the country. We never did enter the Inc. 5000. We just sort of like, we're too busy selling deals. We need to not work on the marketing stuff and work on just the sales side. So the story of QuotaPath is really born within the threads of the TrendKite sales team, where I would have a sales rep come up to me and be like, hey, come on, you paid me incorrectly last quarter. AJ, get with it. Like, that's not, and if you're out there and you're thinking about it, there's nothing worse than looking at your paycheck. Just imagine looking at your pay stub and it being like $2,000 less than you thought it was going to be. Mm-hmm. And that was a really frustrating experience, and one that I understood and got from a sales leader myself. And when we talked to the CFO and looked at spreadsheets and talked to controllers and rev ops, it was just always a mess in a formula. And really wanted to build something that was visible, that there was transparency for the sales team, transparency for revenue operations, finance, accounting. Even the CEO could see that, like, oh, this compensation plan has been verified and signed off, and this is what this person's owed. But for the sales rep themselves, really understanding and forecasting and understanding how much would they earn. So in 2018, I was leaving TrendKite. We were acquired. We were just getting our LOI, so it was like time for me to exit stage left before PE and a private equity company came in. It was good timing. I moved back to Philadelphia from Austin, started QuotaPath. We focused very heavily on the product for the first 2 years and actually didn't launch our paid product until the end of 2020. And so 2021 was our first go to market, getting customers. And that was 3 years into the business, where TrendKite was already at 25 million in ARR at that point. So very different approaches to how I started each company.
Gotcha. So any reason why it was such a different approach?
Yeah. The first time around, I realized that going just straight B2B top down would get you a lot of top line growth to start with, but retention would be a challenge. And so I wanted to build something where the end user and product could be a lot of tangible features for lots of different personas. And that became well, how does the business model work? And so I saw Slack or Dropbox or other companies that are now what we consider product-led growth, PLG. And I was like, oh, well, there wasn't a thing called PLG, but the freemium was a business model choice, an intentional business model choice that as a founder CEO, you have to get 100% behind. You can't just build a company and then bolt on a freemium afterwards. It doesn't work because it doesn't feel like it's within the fabric of the organization. And I wanted to make sure that everyone understood it. So the intentional choice was building the product and engineering teams first, and then waiting later until we added a sales team.
Gotcha. And I think, like you mentioned, those, it reminds me of a talk that the former CRO, I think Mark Roberge of HubSpot, right? Yeah, he that's what he was talking about, like talking about revenue retention, how it's so important, and how that's correlated to product market fit. And you have to know, like, your customer success metric, know what that is. Like for HubSpot, it was if a user's using 5 out of the 20 features, then that's the customer sticky. So I think, is that what you were working towards?
Yeah, I mean, stage 2, Mark Roberge's fund is an investor in QuotaPath, and I've gotten to know him fairly well. And Sales Acceleration Formula, his book in 2015, was like my sales Bible at something that I used. And that retention piece of it is what ultimately stuck out to me. He wasn't the only one writing about that. There was a handful of other folks that were really evangelizing this idea of a different business model. And that became like just a general drumbeat for us. And then when we went to raise our Series A last year, Insight Partners in New York led it, but stage 2 was a part of it. I'm also an investor in stage 2 as well. So I also invest in companies that have that same PLG approach, but really you nailed it. It's retention that ultimately the founders and the management team are focusing in on, that everything around positioning and messaging focus on that end user, that customer.
Right. So that's like I think a tough dilemma for founders, right? Because you had like the acquisition, the first company, you did it with like that whole top line growth, and retention kind of took a hit. But then you had the right connections, the right advisors to kind of guide you in the right path with QuotaPath. But for founders coming in today, all the investors that they're probably speaking to are like, where's your revenue? Where's your revenue? Show me your customers. Show me the money, right? So how do you kind of, like, as a first-time founder, navigate that space?
Yeah, I there's always different stages. And for the very first time there's the pre-seed, seed, Series A, and they are looking at different metrics. Those metrics have changed over the years on what they're looking for. I like to talk about a investor here in Philly that's fairly well known, Josh Koppelman of First Round Capital. And he always, First Round Capital, it's right in the name. So he invests in not necessarily first time founders, but the first round. And the story is that come dream with me story. Like, what is it that you're really trying to solve? You might not have it all solved, but what is it that you're going after? And so that early momentum is just really built around the founders and their experience and how passionate they are around that problem that they're really trying to solve. They might not have everything figured out. And so early, sitting down with Josh, talking a lot about like our contrarian, quote unquote, contrarian view, because you like to see, Peter Thiel talks about this all the time. You like to see founders that have a different point of view on the world around them. And this mental model with like Mike Maples Jr., another Floodgate, another investor that is done really, really well by investing in founders that have this mental model of the future. What's the future of work? You hear that all the time. And so as a founder, if you don't have all of those metrics, you really want to make sure you're honing in on, hey, in the future, this is what the world is going to look like. And this is what we think about. Now, at QuotaPath, we didn't think, oh, there's going to be a pandemic. No founder thought about that, but we did think, we did think about sales teams and the decentralization of sales teams that were where sales reps were using their own tools and already like picking up on this and already had their own spreadsheets, but were getting more and more intelligent about how their own sales process was done. And so giving them something at their disposal to log in and forecast out their earnings was just another piece of that puzzle. And that's really what I honed in on when I went to this pitch and talked about it. You traditionally hear, oh, pre-seed, you have this idea, seed round, you've launched the product, your Series A, you have product market fit, Series B, your growth equity, you're adding capital to fuel that like growth curve. And some of that holds true, but there aren't really specific dollar figures around each one of those. If you hear $1 million to get to your Series A, that's not true. I've seen Series A's done at $20 million in ARR. I've seen them done at 0. It's really about the idea, the market, the founder, and what they're seeing in terms of utilization or usage potentially in their app, because if they're freemium, then there's other metrics that you need to measure off of.
Gotcha. Cool. So AJ, you're always like kind of leading that sales and marketing or the sales and account management charge, like the companies that you founded. So what are some tips or some advice that you can give to early stage founders? Like how should they go about getting their first customers, like their first 10 customers? And then what changes after that to get their next, 100 customers?
I mean, it's you'll hear over and over again. I'm sure it's been repeated on the show that the founders will do the first sales. That's obviously true. You can't hire someone to do that, but I actually think what gets missed is even after you hire a VP of sales or a sales team, and you're 100 customers. I mean, today we're closing in on 400 customers. Right. And even at that customer 400, it's really important for the founder to be still involved in some level of the sales process, to having conversations, to knowing their customers really well. And whether that's the health of the customer, the utilization of accounts, or understanding what the business problem that the customer is trying to solve. Like, for example, our conversation started because of a reach out from you mentioned one of our sales reps sales process, and she's now an account manager now, and he's account manager. And I had asked her this morning, like, oh, what's the health of this account, of your account? And she's like, oh, well, 70% of the reps have actually logged in within the last 3 months. And that's our trigger is actually 60%. So 60% of the sales team has logged in within the last 3 months, will contain some level of a healthier account. Our daily active users and monthly active users are something that we look at. It's usually here like 15% of your daily active users should be logging in at a monthly cadence, meaning if I log in and I have 1,000 users total, then 150 should be logging in every single day. We're currently tracking at 27%. So I feel fairly healthy in that not every sales rep is going to log into their account. Totally understand that, comp plans there's some sales cycles, enterprise, where you might close 3 deals in any given quarter and you're not logging into QuotaPath every day. But there are a lot of customers where there's more transactional deals happening, and they're going in to see how much they could earn, and also goal tracking to how much they will earn. And here's the down payment on a house that I want to buy. So I'm going to add that with a goal with a little emoji representing a house.
Gotcha. So, founders getting their first sales and then scale. So you're just saying, like, your advice is, regardless of if you hire people to sell for you, hire a VP of sales, you always have to stay involved. Ears, so always be involved.
Always stay involved. No matter what size the company is, stay as involved with customer and customer process, customer life cycle as much as you possibly can be, because that is the lifeblood of your organization. Now, the question you're also asking on the other side of it is, well, how do I hire a first salesperson, a sales rep? What does that look like? And every single company is different. It really depends on where you are as a company, the DNA of the founder. We didn't hire our first seller until 2.5 years into the business. And even then, the 2 people that we hired, I had worked with for 6 years, Samantha Manley and Meg Rodriguez. I worked with both of them. Sam runs our new business team today as a director, and Meg is the director of customer success today. So those 2 people are going to be pretty foundational to building and leading teams as you scale.
Gotcha. Cool. So AJ, what are some mistakes that you made your first time around as a founder that you are like, I'm going to make sure that I do those things right this time?
Well, I make mistakes as first, second. I'll make mistakes as third. So you're always making mistakes.
Of course.
Some of the more egregious ones, I didn't really understand boards and how boards worked. So having an investor join our board immediately within 6 months was a mistake. It was a mistake in that, like, we just didn't know what we didn't know. wasn't a mistake that the person was a bad person joining. It's just we didn't really understand how alignment and how you needed to make sure that you aligned your organization to the board. So one of the things I do today is I have weekly chats with every single board meeting member. I'm very transparent. I give visibility to the board as much as I possibly can so that expectations are there. If we're going to miss a target, they're going to know well ahead that we're on track to miss it. If we make a target, I don't necessarily sandbag. I don't think that's the right way to say it, but we exceed expectations. So even for our financial target for this year, we well exceeded it, but I wasn't 100% confident in February that we were going to exceed it. So it was something where I had to flag it at then, and then like we kind of just continued to build towards to it, where it was, once it was like in sight, it was like, okay, well, what's the next target that we're going to meet this quarter?
Gotcha. Because making sure that the board is always or aligned with like the company, your vision, and everything that's going on in the company, and they're always up to date. Gotcha. But yeah, you don't think about that stuff, right? In the beginning, your first time around, especially, you're just like build, sell, build, sell, build, sell. It's kind of like, and then investments. It's kind of what you're thinking, right? No, that's really good. So now switching gears to the product itself. So, for our listeners, we're FiveRings Marketing, we're customers of QuotaPath. We love it. It's a great product. And I totally agree with, the problem statement you were saying earlier, where sales rep, it sucks. It really destroys trust and confidence in a company when you're, as a sales rep, you're not getting paid what you thought you were getting paid, or what you're expected to get paid. So that's a huge problem. And yeah, when I was an account executive a few years ago, I had my own Excel sheet. I was tracking every dollar down to the penny, because I know that I have to have my numbers right so I can keep the organization accountable. Right. So salespeople do that, especially good salespeople. They keep track of that. So you're definitely solving that problem today. You've solved that problem for us. What's the future of the product looking like? Where do you see this going?
Well, so first off, we have a lot. Thank you for the kind words. We have a lot of work to do on the product side. Like as a founder CEO, I'm like, you could tell me, hey, AJ, I'm having this issue with payouts, or this isn't running correctly, and I know all these issues. So I'm like, yes, yeah, team, I know these issues, and I know we're working on them. So there's the first, like the checkoff bucket, like of the I need these features. That customers are asking for. I need multi-currency conversion over time that does this and this and this. I'm like, okay, cool. We need to service our international. There's a whole bunch of checkoffs of those. Those are great. But if we just did that, like we're building faster horses, meaning we're building what our customers are asking for. And I never want to just build what customers are asking for. I always want to innovate. So the second piece of it, what we're really thinking towards is, without giving too much away of what we're working on, is the idea of the perfect compensation plan for each and every organization. Now, today we run comp plan consults with our customers, and you all could do that through Graham Collins, our chief of staff, and that's pretty easy. But in the future, in the very, very near future, what if I told you, Sheem, what if I told you what the absolute perfect plan for your organization would be? And this is how you do it. And if it changes each quarter, it changes each quarter, but we're going to tell you and give you the insights to the absolute perfect plan.
That's nuts. That's like, because that's something that we are always like, different type of role comes in or whatever. You're always like trying to figure out. And if it's going to work, it's just a hypothesis until you put it in play.
And you're using flawed data because you're using data from previously. But what if, since QuotaPath, we told you have 400 customers, what if we told you exactly what that needed to look like? Because we built a community around people that Mark Roberge has given you this retention plan, and he served it up directly to you all, because we've vetted it, used it with our other customers, but have also said that this is the right type of plan.
Yeah, that'd be incredible.
So that's what we're working towards and working on for this year, which again, without giving too much away there of what that looks like, but we will have a fairly large opportunity and release later this year with that.
Gotcha. Oh, that's huge. I think it's one of the biggest things. Like, it's me and my co-founder, Nilu, we sit together, open up an Excel sheet, start running different numbers. How does this affect margins? How does this affect cost of acquisition? And like, what's the payback period looking like? And there's so much that goes into putting together these comp plans. Like, it's nuts. It's not just a matter of picking a percentage. Yeah, cool, we'll give you 10% of ARR or something. It's not as easy as that.
I'm going to ask for a favor right here from you specifically. Book a time with, I'll send you the link afterwards, with Graham Collins. who runs Complaint Consults, but like I would
Mm-hmm.
love for you to sit down and talk through some of that payback period, and then
Mm-hmm.
he'll talk to you a little bit about what we're building and how we're building it.
Cool.
So you get the sneak peek, but your listeners, they should book a Complaint Consult and get a sneak peek as well.
Maybe they should. Yeah, absolutely. Cool. So AJ, as we're wrapping this up, what's one piece of advice that you would leave to our founders listening in?
Yeah. The thing that I've always heard, this was true for sales. I've never had a clean job. I've always had dirty jobs. So I've gotten kicked down a lot. I've just gotten told no, or whether it's in sales, cold call sales, or I worked on a horse farm cleaning up horse manure. I've just had a lot of shitty, sorry, excuse my language, shitty jobs. And you're going to get lots of no's. And so when you're fundraising and you're having conversations, don't get discouraged. It doesn't matter if there's 50 or 100 people that tell you no. Do not get discouraged. Do not let that distract you from what you want to achieve and what you want to go out and build. You absolutely need to make changes and flexibility and pivots. And then sometimes you need to scrap the whole idea. That happens because you don't have product market fit, but do not get discouraged because of what one person thinks. That's held true, where I hold a lot of chips on my shoulder, and it's not necessarily a good thing. I know who all those people that have told me no are, and I've never actually sent the email of like F you, but I've always wanted to send it, and there's been plenty of times where I could have sent it. So just hold that on to that. And there was the one time where I'm like, yeah, you remember this one thing? And like, no, I don't even remember telling you that. I'm like, okay, cool. Well, I do. You did. And it happened 6 years ago. Well, check this out. And so it's a good feeling when that happens.
Right. Amazing. Thank you, AJ. And if our listeners want to connect with you and find you, where can they find you?
LinkedIn is the easiest by far. That's by far of all the social. You can shoot me a personal message. If it is a personal message and you said you listen to this podcast, I promise you I will respond.
Awesome. AJ, thank you so much for coming on the show and sharing your wisdom.
Yeah, thanks so much. Thanks for having me.